Let's have a look at gold because, of course, over the past few days, we've seen it get its snout above $2,000 an ounce, closing in on the record highs of 2020 and, of course, 2011. There's gold, though, now down a little bit today. There appears to be more optimism in the banking sector after First Citizens Bank in the States struck a deal to acquire Silicon Valley Bank after that entity's collapse. However, our guest says he's bullish on gold. Why wouldn't he? His company markets a bunch of gold funds, and he says bullion is en route to hitting more record highs. We're joined by Whitney George, CEO of Sprott Incorporated. Thanks very much indeed for coming on the show, Whitney.
Thank you for having me.
Whitney, I had no idea that this Sprott Physical Gold Trust was so big. You've got assets now, the latest I saw, of about $5.7 billion.
Well, it's been a very, very successful product. I've got to be a little careful about what I can say due to compliance reasons.
Yes.
But our physical trusts were created after the financial crisis to take care of people who were worried about counterparty risks that made themselves visible during the financial crisis, and certainly more recently, owning things physical has become a lot more attractive to people. We've gone from a world of just-in-time inventory to just-in-case inventory, and that holds true for a whole host of materials.
And you referred back there to the financial crisis of 07, 08, and you reckon that gold, after a crisis, gold is one of the first things that people buy after being in sell everything mode?
Well, gold, is an insurance policy for portfolios, and when you get into, real liquidity, it can sell off very rapidly. Also, that happened in 08. It also happened in 2020. Mm-hmm. But once the liquidity crisis is resolved, replacing that insurance is the first thing people do, and so it serves a very useful purpose. It is a currency that's nobody's obligation, but from time to time, it is going to be subjected to the same factors that every other asset class is.
And that's Physical Gold Trust has done, as you might expect, a pretty good job of tracking gold. The MER is about 0.4%. I mean, you got to get something for running the thing. I see the 5-year return at the end of February, just over 6%. Gold itself, a return of 6.7%. So it's tracked gold pretty closely.
Yes, it has, and that's what it was meant to do.
Can we talk about the Sprott Gold Equity Fund? And I know you're not a portfolio manager, so you can't get into great detail here for compliance reasons and everything, as you said. Just looking at the performance of that one, it soared through 2010, 2011, and then underperformed the gold equities index broadly. Why was that?
So, our active products tend to focus on smaller companies where we can uncover fundamentals that we think are interesting. Mm-hmm. It's an interesting sector because the large companies either have to discover and develop projects or they have to buy them. And so there's a constant M&A process that goes through. And I'd argue right now, because so little has been spent on exploration and development in the last 10 years, we're probably well into what could be a very robust M&A cycle, because at the end of the day, these are depleting resources. Mm-hmm. Smaller company bias tends to struggle in bear markets. And I was just looking, it's been a difficult area to be invested in. Last year was a down year. Mm-hmm. 2 of the last 3 years were down years. 3 of the last 5, 6 of the last 10. So normally one is accustomed to being in a bull market, 2/3 of the time, and a bear market 1/3 of the time. And for gold equity investors, the last 10 years have been the flip side of that. Now, obviously, we don't believe that's going to continue. Mm-hmm. We think a lot of mean reversion in front of us. Again, when you have bull markets more often than bear markets, we think the smaller company exposure will be beneficial once again.
And certainly, a lot of portfolio managers come on and they say, oh, just buy Newmont and Barrick, not much imagination. But yeah, I'm looking at the top holdings. Gold bullion's the top holding in the equity fund. But then you've got Mag Silver, 180 Gold, Cisco Mining. So your guys have not, or your team has not just bought the big index holdings. They try to seek out individual gold companies.
Yes, we think in the long term, active management in this sector in particular can add alpha. Although the last few years have been difficult for the reasons I mentioned.
No big. I mean, the mandate includes precious metals, but you have Mag Silver as the second biggest holding, or you had, according to my latest. This could be. I think this might be the end of last year. Do you ever get pushback to people say, well, why do you have a silver company as your biggest equity holding?
I'd have to leave that discussion to the portfolio managers. My job is to assist them, help them, and kind of oversee things here at Sprott. But we have a very large professional staff that I'm very proud of, with a lot of resources to bring to this process, and I'm very optimistic about the next 5 or 10 years.